The German stock market, the DAX 40 futures, I've got the continuous contract here and I've got the monthly chart. It is the start of March 2025. You can see on this chart, we've got a channel. You could put the line there. You could put the line of the moving average, and we're breaking out of the top part of this channel. Here was a breakout point. Here was the bottom of a trading range. And we're probably at around about a measured move of this entire range. So traders that were long here looking for a measured move up, got to here, you can see this pullback tested this breakout point down here. And traders will pay attention to whether this pullback is able to close below that breakout point or not. And that sets the stage for potentially the next target. We reached 23,000, which was a target I wanted to get to. We reached it much faster than I thought we would. But once we'd broken out of this range and then broken out of the top of a bull channel, we're expecting some kind of a measured move up. Channels are drawn roughly in here, but we're around about this price, 23,000. And we can see when we closed last month, we had a small tail. Now, this doesn't mean traders should start selling. This means some traders that were long early are starting to take partial profits. One thing I pay attention to is overlap. Here is a gap between bars. Here is the low of that prior bar. So here is a gap. But look how much overlap there was at the top of this bar. So even though it's a spike pullback and a channel. And that means this channel line is a test target, I think, for later. We can go 5 bars up and then 7 bars down, but that's a spike and that's the pullback. Now, this gap can also lead to a measured move, but where from? Is the measuring gap somewhere here, taking us up there? If we put the line in the middle of that gap, is it somewhere around 23,000? I think it's not clear to me where that measured move is, but it's certainly incredibly bullish on this chart. So I'm not looking to sell on the monthly chart. Always in long, we've got consecutive big bull bars closing on their highs. What do bears see? Well, bears see these are the 2 biggest bars on this entire chart almost. Maybe this bar is big. These 2 bear bars are big. Here's a big bear bar. But this can also be a climactic end to a channel. Okay, traders are long in this channel and they're hoping for this huge breakout to reach a target so they can take final profits. So perhaps the next month here is going to go above this bull bar, and we'll see if more traders are going to hold on to those long positions. All these bars are small, and so this is a lot of profit for traders that were long on this chart. So always in long, better to be long or flat. I think this is likely to play out like a climax. Al says if you break out of a bull channel, it often fails in 5 bars, 1, 2, 3, and that could be March, April, May. We're coming into the more bullish time of the year. If you look at March, April across the years, and so that might mean sideways to up in some kind of a channel. Maybe the channel is there. Maybe it's something like that. That's 23,000. You can see the market respected it. And so I think if we went to 23,000 once, we're probably going to have to go above this bar to see what's there. And that would mean testing 23,000 a second time. Something I noticed when I was doing my prep for this video, if you bought the close of 2024, you're already at 1-to-1 and you've only been in the trade a couple of months. So these traders have done really, really well. If you bought, you could buy the close of this bull bar, or you could buy 1 tick above, and you can see we're at 1-to-1 of that trade as well. On this chart, the market is going parabolic. Okay, this is the same distance between the bars and the moving average, and now we're rocketing away from the moving average. This is unsustainable, and at some point, it needs to create a pullback and go sideways for a similar number of bars. Let's take a look at the weekly chart. If we go back further on the chart, you can see we've got these sets of consecutive bull bars. This is something I pay attention to when I'm looking to trade second legs. As long as one side is doing this, I have literally 0 interest in shorting. I'm better off waiting for a pullback, trying to get long, betting that we're going to turn into a trading range in the worst case. If you see this, you've got to expect this to get a second leg, and we know we've stopped out every bear that's sitting above here. We're probably going to go higher. Well, this is pretty much equal to this, except this is a little bit better because it's above both moving averages. This is crossing them. So this needs a second leg. We've got a second leg. It's just as strong, if not stronger than this. So it's a trading range, or we're going to get a bull breakout, but I really don't want to sell near the lows. Now we've got a new breakout to a new high, and now we're just repeating this pattern. So it's buy and buy lower. Bears are getting stuck. You can see every time a bear scales in, They get stuck again, selling above here, selling above here. Do you want to sell above there, or do you want to buy and buy lower, betting those bears are going to get stuck? Now, when you look at the chart this way, this move is much bigger than all of these. And that's why I said the monthly chart looks climactic, because now the stop is very, very far away. So on the weekly chart, last week was a small bull inside bar. It's got a tail, it's closing in the lower part of the bar. So some computers will see it as a bear bar. It's also an inside bar, which is the end of a leg, and it's a pause. Most pauses in a strong breakout lead to continuation. So I think there's a very high probability we're going to go one tick above these weekly bars. You'll notice these bears were not able to sell below that bar. So no bears are short there. The only place bears can really exist is somewhere above these bars. They don't have a sell signal. Where's the stop for the bulls? Well, there's a micro double bottom here. These traders got a measured move up. That's good. If you bought the close of this bar, then you've got a target at 23,179. If a trader bought this weekly bar or bought above, they got a bad looking entry bar. But for me, there's no reason to panic unless that bar gets triggered. The bar didn't get triggered. We're back at the entry price. We might need to go sideways this week a little bit more to see whether these bulls are going to stay in. One thing that's also interesting is that we are 1,500 points above the moving average, and it's difficult to find another time where that's the case. The last time we were so far above the moving average was here, spike, pullback, leg, and then surprise bear bar. Expect a couple of legs sideways to down in a channel. So you can see, even if we sell off, we're likely to do it something like this. So it's climactic, but the next phase is likely to be something like this as opposed to go all the way down in a bear trend. So always in long, we've got an inside bar last week, better to be long or flat. We're seeing if traders are going to stay long above this bar or whether they wanted a better follow through bar. It's just not bearish enough on any time frame. So I think the only reason to sell is for traders taking partial profits. There's no sell signal. And until there's a sell signal, there's really no reason to look at getting short. The only reason these sells work here is because traders were able to sell and make money the first time. Okay, that's low probability. But once that's happened, then traders are more confident selling the second time. Bears need to do a lot of work to get all the way down there and then get a measured move all the way down here. And that's a lot of work. I think it would be easier for these traders, for these bears, to get the market up there, create a smaller higher low, and then measured move down to the start of the leg. So I think we're going up to go down on the weekly chart. And that's DAX for next week.